What's going on, guys? I have a lot to talk about today. First of all, absolutely bizarre day for AMC. Minus 24% in the red today. Actually formed a new 52-week low and erased all of the gains that we saw last week off of the third bottom, which is fine. I know some people are freaking out. I want to say something right now, and I want people to actually listen to what I'm saying. This was going to happen no matter what. No, it might be hard for you to believe, but this was going to happen no matter what. The pattern is doing what the pattern is going to do. The algo is doing what the algo is going to do. Fractals are fractaling. The macro is perfect. This was always going to happen. Once you come to that realization, this becomes much more zen. A day like today, I'm not even flinching. It doesn't bother me. It's, it is what it is. I'm buying more. I'm averaging up on my position on AMC right now. Averaging up. The January 2024 contracts have not budged. Have not budged in the slightest, even forming a new 52-week low today. They're holding their value. I'm still green on them. Only options position that I'm holding on AMC, January 2024 contracts. That being said, when you come to that realization that this was going to happen no matter what, and the pattern is doing what the pattern is going to do, the fractals are doing what the fractals are going to do, this play becomes very zen. Not stressing on a day-to-day basis about moves that like today. Like a move like that we saw today. That's pretty much it. So let's just jump into the video. I'm talking about SPY today, so we'll start with this. Just starting with the fact that SPY spent a very long time in this ascending channel here, which brought it to all-time highs. And while it's time trading in this channel, the meme basket squeezed. January 2021, June 2021, GameStop, AMC, the rest. Both squeezed while SPY was round to the upside in this ascending channel, which took it to all-time highs. All-time highs 480. From that point, trading a descending broadening wedge, ping-ponging off the top and bottom all the way down to 340, which was your bottom, October 2022. And then from that point, SPY has done nothing but form higher highs and higher lows to the upside. And at the same time, broke both of its macro patterns. The descending broadening wedge broke out here, retested, confirmed, bounce off, and broke the ascending triangle that it transitioned to outside of the wedge. Multiple rejections here at 418, broke out of that as well, and once again, higher highs and higher lows from October 2022 until today. Golden cross on the daily, 100 plus days closing over the 200 EMA, and on top of that, a perfectly symmetrical bottoming action on SPY. Covered this multiple times. The blue is your middle here, lowest low, one break above the ascending triangle here to retest the macro of the wedge. Coming into the red boxes, you come down, break below this horizontal line at 380 on both sides, break below it here on the right, and on the left, came a little bit lower on the left to retest the wedge once again. On a bounce there, up to 418, where you find a rejection on the dot on both sides, 418, reject, come down to the horizontal line at 380 on both sides, find a perfect bounce off, bounce up, fight for 430 here, fight for 430 here, come even higher, cup and handle, and then the rest of the move up to 460, the symmetrical equivalent, these two white rectangles here. And then from 460, SPY has seen downside, reject the top of the channel, and finished the symmetry to the upside to 460. And I mentioned the last time I covered this, from 460, we're expecting a pullback, and it's possible we come all the way down to 418, 420, although I think it's unlikely, but it is possible. It would make sense just looking at the symmetry of the move, because you did here, just working backwards, come down to 418. It's possible that that's what happens. It's also possible that you just come down to the horizontal line I have drawn here at 429, 430, where you could find a bounce here, which would also more or less be the bottom of the ascending channel. This ascending channel SPY is trading in will bring it to all-time highs. When it finds a bounce off this bottom trend here, the next time it works its way back up to the top of the channel, it will be at all-time highs. So nothing has changed with SPY. Very bullish, and was bullish in January and June 2021 while the meme basket was squeezing, trading in this ascending channel. Broke both of its macro patterns, the descending broadening wedge and the ascending triangle to the upside. Perfectly symmetrical bottoming action, and climbing in the new ascending channel that you see here, rejected the top, now heading for the bottom. Found a bounce off 433 up to 439, I believe the close was today. There actually is a descending resistance here. I don't have it drawn in. There's still room to the upside before it touches that resistance. I would imagine when it makes its way up there, it would reject again and come lower to finish off the rest of the move to the downside. Golden cross on the daily, hasn't seen the 200 EMA in over 100 days. And on top of that as well, this bottoming action is more or less an inverse head and shoulders. Here would be your head, here's the left shoulder, and now coming down to the right shoulder. When the right shoulder completes, it's going to bounce, like I previously just said, back up to the top of the channel, and that will be all-time highs for SPY. So that is pretty much it for SPY. Jumping into AMC, the macro is perfect, always has been, nothing has changed. Macro break right here, macro break right here, W plays out, 6 points, takes you to the end of the blue on both sides. From the 6 point, you drop to the flat portion, January flat portion, and the current 3 bottoms here, 1, 2, and 3. Third bottom is the lower low, the lowest low. Form an uptrend from there, break out of the triangle and squeeze. Over here, same story. First bottom, second bottom, third bottom, lower low. Actually formed a new 52-week low today, which is perfectly fine. I'm going to be touching on a few different charts today. And this third bottom, we will form an uptrend from here, and we will break the triangle, and we will squeeze. Once again, this is a macro and an uptrend. Higher highs and higher lows here. So January, come down, June, come down. The flat portion of the current cycle is playing on top of the flat portion of the previous as support. So higher highs and higher lows on a very macro level here. This is a bullish chart. Moving on from that, the flat portion. So looking at the flat portion of both cycles, January up top, June on the bottom. I'm going to go through this fast. The important levels to watch are the red and blue horizontal lines on both cycles. So the first bottom, you break below both. Very choppy down here, poke above the blue a couple times. Over here, same thing. Break below both, poke above the blue a couple times, gap up from there, gap up from there. 5 peaks, increasing height on both sides. Played out much faster in the current. And then the final iteration, the W with the tri-peak, come down, break below the red horizontal line, bounce off the blue, reject the red, second bottom. Come down, break below the red, bounce off the blue, reject the red, second bottom. From there, you're the tri-peak, so you gap up from your second bottom, both sides. 3 pokes above, 1, 2, 3, 1, 2, 3, and then reject the red horizontal line again, which brings you to your third bottom. So that's where we are now. We actually formed a new 52-week low today, which is fine. Somebody brought to my attention the fact that I should cover AMC and APE combined, the combined chart. Shout out Brent, very smart guy in the Discord, suggested that I cover AMC APE combined as a ticker because AMC, as of right now, is split into 2 tickers, AMC and APE. APE is AMC. It's a split ticker now. 2 charts to look at. When you combine them, the picture looks a lot cleaner. Before I get into that, really quickly, I just want to touch on this. It has no relevance. I thought it was cool, though, that the third bottom that we're seeing on AMC is playing out very similar to the IPO of HKD. The Chinese ticker that ran from $13 to $2,500. IPO here, uptrend to a point, and then a nasty pullback to a lower low than the original starting point of the uptrend, which is the same story here with AMC. So this was the third bottom at first, the uptrend, the climb, and then a very nasty sell-off to a slightly lower low than what we saw here. So what would be nice to see here is a bounce off and something to this effect, and this would be the gap up we're looking for, the $4 plus gap that we're looking for right here. So this looks very nice. No significance. I just thought it would be cool to touch on it. Now, I'm going to cover AMC and APE combined because there's 2 tickers making up AMC as a unit. So when you look at AMC and APE combined, we're looking at, and before I do this, AMC and APE combined is pretty much just the flat portion, the final iteration here. August 2022, APE was introduced. You come down, and then you play out the flat portion, the 1, 2, and 3 bottoms, which takes you to your squeeze. Very interesting timing, by the way, of the APE dividend. But nonetheless, looking at APE and AMC combined now, the chart looks a lot cleaner. And this is what the chart will look like when the conversion goes through. Granted, the scaling of the side here will be different. The numbers on the side of the chart will be different, but the chart itself, the candles, will be the same. When the reverse split conversion goes through, nothing about the chart will change. The only thing changing is the scaling over here on the side. Different numbers. But the chart's the same. So, looking at the final iteration of AMC now, January 2021 up top, and AMC plus APE combined as a single ticker on the bottom, this looks absolutely perfect. And before I cover this, I just want to point this out. your first and third bottom of the January 2021 cycle is pretty much a perfect double bottom. The third bottom is slightly lower than the first bottom. So it's pretty much a perfect double bottom, slightly lower for the third bottom. Second bottom is a little bit higher. And looking at AMC and APE combined, the flat pattern is the same exact story. Here's your first bottom here, and then the third bottom is pretty much a perfect double bottom, slightly lower than the first bottom. So this looks very nice. So really quickly, just touching on this, I probably should have covered this a long time ago. This is what I should have been tracking, but you know, I never thought about tracking it like this. But this is a very, you know, shout out Brent, very, very good idea to look at AMC and APE combined, as they will be converging this week, and this is what the chart will look like for us. So your first bottom here, same story as always. You get the gap up here. You get this top move here. This would put in the 5 peaks. Just played out much faster in the current cycle than it did here. Break below this yellow horizontal line on both sides. You get the move back up, poke through, as you see it here. Second bottom, the tri-peak, 3 peaks poking above the yellow, and then break below for your third bottom, double bottom perfectly. First and third bottom, perfect double bottom, just like the 2021 cycle here. And although AMC alone made a new 52-week low today, AMC APE combined did not. It made a higher low. And if we're just looking at this from a tracking standpoint, very reasonable to say today was this pullback here. So you off your third bottom, you have this uptrend, higher highs and higher lows, and you get a very nasty pullback. I mean, relatively to the price action back here, very nasty pullback to a higher low. And it's very possible that's what we're looking at today, was that pullback, and it formed a higher low. So this looks very good. Moving on to the daily, figured I would just throw this in. Same story here. So the first bottom, the top move that you see here, the break below, the poke above, as you see here, your second bottom, the tri-peak, and then your third bottom here. And again, a perfect double bottom, your first and third bottoms. When looking at AMC and APE combined as a unit, this is AMC as a whole. So once the conversion goes through, this is what the chart's going to look like. Again, just different scaling on the side because of the reverse split. But this is what it's going to look like, and it's perfect looking at the flat portion of January 2021 compared to AMC plus APE combined right here. So this looks very good. I'm expecting the bottoms in here. No reason to expect any more downside, whether we, you know, see a very drastic move back up or not. We should see an uptrend here, and that's fine. And, you know, I covered this multiple times. There's 2 key levels. This is just AMC by itself now. But the 2 key levels of resistance here are 401 to 408, this blue horizontal line, and 520, the red. And we rejected the blue horizontal line. And in AMC APE's case, the chart combined, again, rejected the yellow. It's yellow here, but still rejected that first critical resistance point. So really quickly, I want to look at the EMAs because this is perfect, legitimately perfect. And if you remember me saying when we gapped down originally that the price action would meet the 20 EMA and we'd be fighting for the 20 EMA. And look where we rejected. The white is the 20. So when we gapped down, got the uptrend, and look where we found a rejection, the 20 EMA. Straight back down and formed a higher low. I said we'd be battling for the 20 EMA. You'd gap over it, and that would take you to your squeeze. And this looks great. So again, January 2021 on the left, the flat portion, and AMC APE combined as a unit on the right. Looking at the EMAs now, not only is the movement perfect, the perfect double bottom, first and third double bottom here, as you see in the previous, but the EMAs, 20 is in the white, 50 is in the red. So it's starting below, you get the wave move, second move is higher on both sides, you get the wave move, and then you break back below the 50, as you see here, and then you get 2 touches, 1 break above in the tri-peak, and same here. And then you cross it when you come down to your third bottom, and then you're fighting for the 20 EMA, as you see here. Came back up to the 20, rejected, came back down. I'm expecting the bottoms in here, and we will be climbing to the upside. That's pretty much it for that. One final thing before I conclude the video. The fib spiral. I touched on this in my last video. Not that I'm changing my price target to $300 from $140. Again, pre-split, not post-split. Pre-split, $140. But the fib spiral is implying a $300 price target, and that's not split adjusted. And really quickly, I just want to show this because this is pretty crazy. I talked about this in my last video. starting from all-time lows to all-time highs on AMC, starting at IPO. Very interesting touch points here. So the first touch point on the spiral is the start of the flat portion, the original, that took you to the January squeeze. And then you have your rejection off the top here for 72. Come back down into the current flat portion, and right at the end of the spiral here, zooming in on this move, you actually rejected the resistance of the spiral here, and we will break out of this and squeeze. This is your third bottom, the lower low on AMC. The chart's pretty wonky because of APE, but I just showed you it is the same. It is the exact same that we saw in the January 2021 cycle, the flat portion that led up to the squeeze. AMC and APE as a unit, because this is AMC, when combined, this is playing out perfectly. A perfect double bottom here. No reason to expect any more downside whatsoever. I'm not talking about APE or AMC by themselves. I'm talking about as a unit, AMC plus APE, looking at this chart, no reason to expect downside here at all. This should be the bottom here, and we should be climbing, and we have a few levels to break, and that's it. Reverse split conversion is going through at the end of the week, and I'm assuming that is going to kickstart the squeeze for us. As I've been saying for the past 5 or 6 months now, that is the catalyst for the squeeze. So, very wild day today, but it looks great. And, you know, looking at AMC and APE combined, it looks even better. It looks way better, actually, than just looking at AMC by itself. Perfect touch points here. EMAs look great. Everything looks great. No complaints. So that's it for the video. Very, you know, today hurt for some, I guess. I mean, for me, I don't care. I don't care about a day-to-day basis. I'm just looking at macro. But the bottom should be in, and we will be squeezing very soon. So looking forward to the end of the week, the conversion reverse split. That should be a fun time. And next week is where I think things will start getting very exciting. So I'll catch you guys in the next one.